afternoon. This is Chris Brecher with the Simpler Stocks free video for March 14th, 2015. As you see, it's about 2 minutes before the bell. Today was all about trying to break the doji. So right now we have the ES is up about 2, NASDAQ up 21, playing catch up, and the Russell down just a little, down $1.90. You have oil down $1.22, and a month ago, if you would have said oil's down $1.22, the ESs you would have thought would be down about 15 points, especially with the advanced decline negative all day. But we've just had an underlying bid all day because the NASDAQ trying to play catch up. So let me show you what I'm looking at in this market. This is what I mean by the doji. Let's put it up on a 195 chart and a daily on the left. Everybody is watching that reversal right there on the right and watching this doji on the left and realizing if you get a follow through here, that could be a real bullish development. But as you see, we stayed right in this level and nobody's exactly sure what to do in that level. So basically what you're getting when people are undecided like that, you're getting the catch-up trade, where right now you have this right just in this area. So people instead are going in and buying like the NASDAQ. Now you might ask, what do I mean by this about the catch-up trade? Let me show you on here. I have all these alerts, so I'm sorry those are coming up. We're going to put the NASDAQ on a daily on the right, and we're going to put the ESs on the left. This is what I'm talking about in here. We showed you the ESs. I showed you that it broke over this resistance somewhat. But remember, this is a resistance area, not a perfect level. On the other hand, you have the NASDAQ, which had a similar inverse head and shoulders right here. The ESs have already done their objective in this area. They've already gone to their objective. What do I mean by that? If you take this inverse head and shoulders and you take right here and right here, if you take this level on the left, we're almost have achieved that objective. Now on the right, you have the NASDAQ. Not only has it not gotten to the resistance over here a little above 4,500, but this little inverse head and shoulders, it hasn't done its objective. What's the objective? 3,900 approximately. 4,200 approximately is 300 points. 300 from this breakout would get you right here to 4,500. So that's what a lot of traders are watching, and that's exactly why you got today. You got the catch-up trade, especially when the ESs are just bumping up against that resistance area. Now let me show you a couple of other things. We talked about this in the Simpler Stocks chat before the opening, and luckily I posted these charts way before the opening. In fact, last night I was showing this chart in gold, and I was showing something called the commitmented traders. Now, the commitmented traders is a report, the government report that comes out very often, and it shows what the big people are doing. Now, what do I mean by that? Well, let me show you a couple of things. When I talk about doing a trade, I talk about having 3 reasons to do a trade. Look at a 195 chart of the gold. Look at the daily on the left. So what's your 3 reasons? Number 1, negative divergence. Number 2, possible bear flag. Number 3 on the right is how many times you could touch the trend line here on a 195. And then if you zoom in, take off a lot of these moving averages. Let me just show you what I mean. We're going to remove all studies. Or I'm going to attempt to remove all studies. Give me a second. There. What I love is when you have a trend line like this, plus you have a little bear flag. So if it breaks the bear flag, it breaks the bigger level. Now, what I was showing this morning and over the weekend was this thing called commitmented traders. What this is these commercial hedgers are the people that are usually right. I focus on the commercial hedgers. As you could see in here, when they were really short, like under this 0 line, the market sold off. When they got to almost the 0 line, the market rallied. When they got way under it, the market sold off. When it got right at 0, they rallied. And what do you have now? The most short they've been in 2 years. That was my 4th reason. So the first thing is If you don't want to trade gold, that's fine. But if you were thinking of buying, you really need to respect that commitment of traders. And a lot of people told me that I saved their behinds today because they wanted to buy gold. And I'm like, you got to look to short gold, not buy it. And as you see, it was down over, let me tell you exactly how much it was down today. Gold was down $24.80. So I'm talking about this worked to perfection to short right there at the bear flag at 1250, goes to 1234. So that's a pretty good trade. So just to let you know, we're watching that. Why are we watching gold so closely? Let me tell you the reason why. It's because I'm watching the DBA. And we talked about this before the opening also. This is a basket of commodity stocks, of 10 commodity stocks, from sugar to coffee and so on. When this rallies, look on the left and look at the DBA, and look on the right and look at the bonds. And you'll see the moral to this story in a minute. So on the right, you have bonds. And what I wanted to show you is the high with bonds was February 10th. The low on the DBA was February 10th. Long-term bonds are very susceptible to any whiffs of inflation. If you go to individual charts within the DBA, whether it's corn, whether it's beans, they're really starting to move on the upside. Why is this significant? Because if this keeps going up, you know Janet Yellen is watching all the commodities. And you know that if she says any hint of tightening, it's going to crush the gold market. And I think that the more DBA goes up, the more that gold stops going up. So that's definitely something to keep in mind. If the DBA goes up on the left and the Fed does nothing and it goes even higher, you're going to have the bonds really fall apart, and all of a sudden they become an alternative to stocks. So ultimately, weak bonds could hurt the stock market. So that's something I'm watching. So tomorrow, what we'll be talking about, well, on the premium chat, what we're going to be talking about is buybacks. There's a big old article today. I was on Benzinga on Thursday in front of, I don't know how many people their listeners are, talking about that once buybacks stop, in the quiet period, the market's going to go down. And then you get 3 different news sources literally hours after I talked. Here you go. There's only one buyer keeping the S&P's bull market alive, and it's all about corporate buybacks. So that's going to be a big thing. We're going to be going over that on the premium side. I had more emails from people saying, I'm glad I'm subscribed because I saw it in there that, I saw that all these news sources picked up on something you've been hammering home for literally months. So I definitely hope that if you joined, which is $7 for a 30-day trial, we go over this all the time. We're trying to pick out which stocks would be the big ones to go up, and before, when they have bad earnings, and then they can pile in with their corporate buybacks, or the ones that are going to slip out the carpet, so to speak. And the second the blackout period starts, the stocks are going to fall apart. So we've been going over all that. Other thing I wanted to mention in here is I have a class on Thursday that's all about, let me find it in here so I can find it for you, simplerstocks.com/day. And basically this is called Day Trading for a Living by me. And it's going to be, the class is Thursday, March 17th from 6 p.m. to 8 p.m. Central. And then I'm going to do live trading on Friday. That's for an extra charge. But you get to watch me trade for 3 hours through the eyes of someone who's traded over 30 years. As you see on here, the 2-hour class is $97. The 2-hour plus 3-hour live is $197. We have not even started promoting it, and we have literally a ton of people signed up for it. So I'm very flattered about that. Just so you know, it's only a 2-hour class. I've already built 168 slides. So even if you don't want to listen to me talk, at least you have 168 slides like a book on trading. Now, this isn't going to be about tax things or about how to get around the pattern day trading rule. This is going to be how I day trade, how I develop ideas, and how I feel intraday, like if something doesn't look right. And I'll show you how I do all that. I'll also show you some of the tips and tricks I use every day. So I hope you can sign up for this. Like I said, you go to simplerstocks.com. You can go to /day in here. and it comes right up. So I hope you can sign up for it. I really think I'm going to be able to help a lot of people. So everybody take care. I will talk to you tomorrow.